Hey everybody, it's Pete. Hope you're having a nice weekend. Just going to do a quick video breakdown of rotation in and out of sectors this week and how it's setting up for next week. So we're looking right now at the week of March 21st. So obviously we start out with the big picture with the market. SPY didn't go quite well bid on the week, but such a strong finish to the month. It's still an inside month, but closing near the high. Two well bid weeks in a row. We broke this downtrend. So we actually have short term order flow as we start to stack the order flow. Now, 2 weeks, it's 10 days worth of trading. Pretty awesome over here. Moving averages are not quite in the right order. Actually, the 20 is still pointing down while the 50 is still pointing down while the 20 is pointing up, and they're not in the right order. However, it's really hard to ignore this. It's 2 weeks of almost vicious buying. One day of selling that just came right back the next 2 days with more buying, and especially the way the market closed on Friday. Everybody's looking for the other foot to drop, but then you get the other argument where everybody's saying everything was a bargain, and now they're starting to be bought up. So we're just going to run through the big three. We're going to drop a line into the other sector ETFs to get a feel for some of the ideas, and then you can take it a step further and drop a line into the sector rotation sheet that we give out every day in every email, so you can get in there and find some stocks that match the criteria that we're looking at right now. So we're going to start out with the big three. Obviously, we just looked at the S&P 500. NASDAQ's pretty similar. I mean, we actually still have, let me get these guys off here. NASDAQ is still similar. It's an inside month closing near the highs. Again, bullish engulfing candlestick here. So it actually took out the lows, but as we've been talking about for a while, large cap tech stocks have just been on fire, no other way to put it, and holding the bid. But very similar to what we're looking at in the SPY is we do have this bigger picture resistance right here, which there was a lot of news out over there, a couple of different gaps, bullish gap, bearish gap, bullish gap, bearish gap. So a little bit of noise over there, but you can see the level. Melted candle here, not as clean, but still near the high of the day. And if we hop on over to the Dow, very, very similar picture. So all three of them are inside months, bullish momentum over the last 2 weeks and above the 50-period moving average. So a little bit of conflict on the moving average side of things. It's clearly a weekly reversal. We haven't made our way over to the monthly yet with basically the rest of the month finishes the month, right? What's next week? Next Friday ends up being April 1st. So we still have 4 full days of trading during the month. So work our way over into sectors a little bit deeper. You can see the XLE finally woke up from its melted candle coma. Probably see that a little bit worse on the on Chevron, which has been the stronger of the ones that we've been trading there. So it did melt up, and again, bottoming tail after a topping tail, traded right back into a well-bid week. The last 3 months are amazing. So there's literally no conflict here. It's just a question of taking off. So I'm still going to focus on energy stocks. Same thing with basic material stocks. A little bit of conflict here, but this whole group has been strong. There's been like 4 or 5 stocks in there, Alcoa, NUE, even some metals and mining stocks that have been perking up. So again, slight conflict here. 20 still clearly pointing up. Really strong finish. Look, this is definitely well bid here, but the monthly chart is a mess. And you can see that even a little bit more clear here. This has to clear this breakout level here right around 90. If it does, and you can zoom out here a little bit cleaner, you can see it's resistance here, maybe a little bit below that here, but really 90 is the level. So bottoming tail, 2 well bid weeks, strong month. Look like everything else. You got a push, a pause, a push again. So XLB strong over the last 2 weeks. Bigger picture, a little bit more challenging to get through here. So we got a bunch of resistance here. Sellers came in, kept smashing it down at that level. And you can see that clean also over here. This is the only part of the conflict right here. 20 is pointing up. If the 20 was above the 50 and this turned up just a little bit more, we'd have no conflict other than this headwind that we have above here. So we might be just looking at cash flow trades for as strong as these stocks have been. We might be just, and again, you can actually see Alcoa turning around already. We might be seeing a little bit of a profit taking up in that area. We'll see. So that's XLB, working our way over into the industrials. Again, such a similar picture where we have this big wall of worry, for like a better way of putting it. This one's up around 107. We do have a swing trade in Caterpillar that we're looking at right now. So short-term picture, still room to go. There's not even a question about that. We're about to cross here for I know they call it the Golden Cross when it's the 50 over the 200. I don't know if this has a special name, but we're about to cross here as well. So if this actually punches through, looking for at least a week out of this trade, maybe a little bit more that we have in Caterpillar. So well bid here, a really good clean push, pause, and breakout, and some obvious room to go. Again, very similar to XLB, but still bullish. No reason to change that. XLV, again, where is this rally coming from? We're a choppy mess here again. However, just working our way out to building that argument on the order flow. Well bid on the month. Last week was well bid, and this week that we're in right now that's finishing up is a melted candle, which you can see here, but we have an inside candle breakout. I want to point something out, something that is a little bit of a, I'm not going to say it's advanced, but definitely something to pay attention to. When you have a momentum move that trades into an inside candlestick that breaks down, you got to be aware of that. And that would just have me being a little bit less aggressive until we see well bid candlesticks. So if you take this price action here, this was a well bid candlestick, and so is this one, but they were both melted candles. Before I would have a little bit more conviction in this following through the 140, I really need to see a couple of more of this. But again, like we're looking for here, the 20 is now above the 50, which is cool. Bull flag into an inside candlestick breakout, melted candle, well bid. So again, not perfect by any stretch of the imagination, but I do like the pause here with some room to go. So again, we're mostly looking at bullish momentum right now. We're not really getting a heck of a lot of help from the monthly chart, just by the way that the market has traded since January. It's just the last 2 weeks where things turned around. And quite honestly, I think a lot of people are given just a little bit of too much credit to the last 2 weeks. It's impressive, but we're still in bearish order flow for 2022. Working our way over into XLY, consumer discretionary. This is not even well bid. It's actually an inside month, but again, near the highs. This story is not going to change. We're having an overall bullish tone to the market for the last 2 weeks. It's really just a question of something as simple as this. We are now at resistance. So the 20 and the 50 are still clearly in bearish order flow. We're well bid here and inside there. So inside with two melted candles, no help here other than the fact that it's near the high. Okay, we're also getting a lot of this rally also here. It came off of electric vehicle stocks catching a bid for a little bit. So melted candle, 3 melted candles, and resistance. It's going to have some work to get through here. So conflict, melted candle, melted candle, melted candle, and resistance. So I would not be expecting the consumer discretionary to be popping next week. XLP, consumer staples, 3 months of melted candles have now turned into a well bid week, and a pretty decent rally here with no pause other than this inside candlestick breakout, but not perfect by any stretch of the imagination. This really 3 months of melted candles followed by an inside week breakout into the 50-period moving average resistance, and moving averages are still bearish. I don't see anything really to do here. We're actually, if you really want to get technical here and do this, we are now basically right at a resistance level. There's not much room to the upside either. So I'm not really looking for a lot out of this right now. I'm going to shift over into some of the ideas that we've been talking about. XLV on the healthcare side, there's been quite a few stocks that have been strong here. But again, we have to punch through this level. You can see that we are now well bid. Actually, I'm sorry, I just went over this one before. XLY is the one we were just talking about. Okay, XLY, XLP. Sorry, I went over XLV before. XLF is the next one. It's the weekend. Give me a break. So XLF, we kept waiting for the financials to have a vicious rally. Right here at the end of the new year into the end of December into January, we're looking for, yes, interest rates are going to rise. We could finally lean into the sector. It's been a choppy mess for a while, and that now has translated into 4 months of melted candles. So there's nothing going on here on the monthly chart. It's a bullish U-turn, but I want to give you context here. A bullish U-turn into a trading range doesn't mean anything. We need to see some type of movement. Like this bearish U-turn here on the weekly chart. This bullish U-turn is not as powerful because it's coming out of 2 melted candles, but this was 3 weeks of buying followed by a bearish U-turn into 2 weeks of selling, into a bullish U-turn, into 2 weeks of buying, into a bearish U-turn. How cool is that? no other way to say it. So anyway, no help here on the monthly other than the fact that it's a green candle. 2 weeks of buying and a nice pause over here. You got to be really specific about this. This is not an awesome scenario. I know that it might look like the same chart as a bunch of the other ones, but it's really not. This sector has a lot going on. This group has a lot going on, and there is no help for months right now. So you're really, and to take it even a step further, look at this rally that we've had here in the financials over the last 2 weeks while the markets rally. Well, give it credit, but is it tradable? That's the question right now. So you take a look at this. You had two green candles here and an inside candlestick breakout on Friday. So compare this to that. I mean, that is just about as dramatically different as you could possibly get. So you can nibble on the financials, but not A plus conviction by any stretch. So if we continue to look at the tech side of things, as we just showed you, the XLK is definitely something to be on top of. I actually have both of the XLK and the QQQ. So we got a bullish inside month, very similar to what we just talked about in the Qs. Nothing there has changed with this big resistance level here. I do like the fact we actually mentioned this in the SPY last week. When we rallied here, we were looking for a nice soft landing around the 50, and we kind of ruined it a little bit that we actually closed near the high again. Look, we have to assume this is going to continue. I actually had somebody ask me this on a coaching call on Wednesday night, which, quite honestly, I have to be truthful, it's one of the silliest questions you could possibly ask. You know, we spend hours and hours and hours every week talking about why we expect follow through. And I forgot what stock it was we were talking about. And he said, but I don't understand. Why do we think it's going to continue going? I'm like, well, we just talked about that for 2 hours. I don't understand. It's everything that we do. So we have to assume this is going to continue until we see it doesn't. Now, if this would have opened higher and traded into a bearish U-turn like this, I would have been all over a pullback coming into next week and into April, but we didn't actually. We actually ended up closing near the high of the day with a move towards the end of the day, which, again, if this unfolded where this pushed into the middle part of the day and then this is how the market ended, I would have said we're going down on Monday, but that's not what we got, which is, again, large cap stocks are not giving up the bid yet. There's no other way to put it. We have to assume that's going to remain in play until we see that change. XLC. This is more bearish than most of the other stuff that we're looking at. This is a melted candle, but clearly a downtrend that has really no signs of reversing. And actually right here, we're right at resistance here at the 50, and the moving averages is still in bearish order flow. So and this week, quite honestly, you can make a case that this is almost a 5-day trading range other than the way it closed on Friday. So we're really just trading off of last week's momentum. I would be looking for these to be sell shorts this week as well. Utilities, I really don't watch that much. They're not really that much in play and nothing really to shine. They're obviously rallying and breaking out over the last week and a half. But what is there really here to trade? Duke, nothing really. So I'm not even gonna expand on it. Same thing on real estate. There are a few real estate plays that we've called out this year, mostly REITs, REITs. But every time we put them in the game plan, they don't follow through. And this is kind of a follow-up on what we talked about last week with the Taylor trading technique and only trading stocks that have repeatable energy candlesticks, which means that they have repeatable institutional attention. The only other area I want to dip into are the metals and miners. Obviously, we know that oil, we could look at OIH and USO. Not that dramatic of a difference from the XLE. So we're just going to leave it at that. But I do want to talk about XME and GDX. Both of these groups are pretty strong. So you might hear us talking about some of these and the stocks that related to these a little bit more fervently as the inflation stuff kind of kicks in. So AEM and NEM, you'll probably have some conversations about that this week as well. So doing a little bit of a deep dive into what we talked about here. Some of the sectors are remaining strong. Some of them are hitting resistance. Just got a little bit thrown off guard by the way the market closed again on Friday. I almost wish it would have closed weak so we could have a little bit better picture of the 3-day swing that we normally look for. All right. Hope you're having a nice weekend, and I'll speak to you soon.